Greetings, everyone. Welcome to an Equity Guru Investor Roundtable. We've got a bunch of gurus with us, gurus, and we're talking about crypto. Oh, look at how excited my friend in the basement is. Galen right down there. He loves this. You love this stuff, don't you?
I love it. It's
You love
all
this.
packed under my bed.
Far corners, Joseph Morton. He's the expert. You're going to want to read his article that's next to us on the Guru website. Vishal Vatura is straight above us. He'll be talking about the charts a little bit later on. And we're talking about a gathering of crypto companies, so to speak. We've got Wellfield Technologies, which is WFLD on the venture exchange. We've got Tokens.com, which is coin on the Neo. We got Big Ass Digital. Just kidding. It's actually called Big Digital Assets. See, now no one's going to forget the name of the company now. Big Digital Assets, big with two G's. It's very rap-like, rapper. BIGG on the Canadian exchange, and then DeFi, DE, Big FI Technologies. And it's DeFi on the Neo exchange. And we're going to begin with the fella that's way up and over there, article man himself, Joseph.
Master of coin. That's what we call him, right?
Master of coin.
Mr.
That's
Coin,
correct.
Mr. Crypto.
Thank you, Vishal, for reminding us all. Now, I chose these four companies because there is a common theme to it, I suppose. Like, we've covered a lot of crypto-related things. Like, we covered miners, we've covered fintech related to crypto, but we never actually covered that DeFi space, decentralized finance. Now, DeFi is in the name of one of the companies. Wellfield has a product, has a series of products which actually integrate with DeFi. Tokens is involved with metaverse, and I'm going to break all this down in a bit.
Yeah.
And of course, and Big is the watcher. They're the ones who look into the blockchain and make sure you're acting correctly. Now, let's start with Wellfield Technologies because they're well, quite frankly, they're an Equity Guru client, and I probably know the most about them.
Yeah.
They have two core products, like I mentioned. They have Seamless, which is the company's protocol layer brand. Now, in English, that means it is it's basically an app which goes on your phone, which allows you to engage in liquidity trading in Ethereum. It aims to make Bitcoin compatible with decentralized finance.
Awesome.
If you go to, can't remember the name of the site offhand, but there's a site you can go to give you an idea of how many DeFi programs are out there, and there's like about 350 because it's still somewhat of a small space, covering $71 billion is some ridiculous number.
Wow.
And only like 25 of them use Bitcoin. Like, some are built for Bitcoin, but for the most part, Bitcoin is not exactly very well represented because of the various chains and coins involved.
Yeah.
A lot of the time, you have to trade over to the stable coin like USDT or USDC and do business that way, or you can trade coin to coin on a place like Uniswap. I won't get too far out of the weeds with that sort of stuff. And what they want to do is enable decentralized blockchain exchanges, which means you can actually trade, you can actually buy something from Ethereum, buy your NFTs from Ethereum using Bitcoin. That's what they want to facilitate. Their other product, MoneyClip, which is their another application layer brand, is powered by DeFi to enhance everyday financial products. Basically, they offer. To be completely honest, I'm not entirely sure what financial products they offer, but a good sample case would probably be something like checking account, savings account. I know there's loans involved.
Savings, P2P payments, spending, investing, borrowing, social commerce, merchant solutions, and crowdfunding on their website here under MoneyClip.
That's great. They've actually added more since the last time I looked. I was more or less. Well, that's actually what they've been trying to do. It's they're trying to spread out geographically, and they've just moved into Portugal, and they are trying to add more functions to both MoneyClip and Seamless. Right now, they're still kind of a nascent company. They're still kind of new. They're still trying to build out their grounding tech, but for the most part, since they've gone live in the venture, I've liked what I've seen, and I've always been kind of skeptical of these companies that try to bridge the gap between decentralized finance and traditional finance, mostly because I honestly kind of remain skeptical they could be done without damaging both irreparably, but that's a completely different argument.
Yeah.
Now we'll go on to another company that's trying to more or less trying to produce this bridge, and it's DeFi Technologies, which is DeFi on the Neo, as Rob said. Now, like many of the companies on the list, they provide a bridge between TradFi and DeFi, and they do it through 3 vectors. First is DeFi Asset Management, which I'll have to probably spend some time breaking down. DeFi Ventures and DeFi Governance. Now, DeFi Asset Management, when I first heard about this, it was honestly about a year ago. And I was a little curious as to what it was, because the first time I'd ever heard anything of it, but I've seen it a few times since. Is what they do is they build tokens on a second layer of a blockchain. And what they do is they tie the value of these tokens to an existing asset. So we'll have, like, instead of BTC, it'll be like, I don't know, DeFi BTC. And people who come in have the option of either getting obviously shares in DeFi, but also you can buy these tokens, and you can stake them and make more money presumably off them, and you can sell them on exchanges or sell them back to the company and basically get out. Now, this is not something that's usually done in a TradFi setting. This is mostly done in decentralized finance. You'll see this a lot in places that are run by decentralized autonomous organizations that are trying to more or less hide what they do from regulators. But in this case, they're completely above board. Now, DeFi Ventures is their investment arm. It's what they reach out to. They find new DeFi corporations to get involved in. They try to get involved in these DAOs that I mentioned, so they can potentially increase their monetary wealth that way. And the third is the governance arm, which is probably the one I'm most curious in. So it's how they get directly involved in DeFi through its infrastructure. More specifically, I mean, some of the latest news, they're trying to actually function as a node for the purpose of staking the Solana blockchain. Solana is, of course, like one of the Ethereum killers. It has a very interesting consensus mechanism. I have an article floating around on Equity.Guru if you want to read up on that. Now, it is something of a potentially lucrative. It is something of a potentially lucrative option for them. If, of course, blockchain has to pick up. Right now, it's kind of in the dumps. Now I'm going to move on to Tokens.com, and this company is almost completely brand new to me, because what they do is almost completely brand new. Is what they do. Well, they're a publicly traded company that invests in Web 3.0 assets. In this case, we're talking about the metaverse, we're talking about DeFi, and of course NFTs, non-fungible tokens. Yeah, exactly. That is the response I get whenever I talk about this stuff.
I got a quick question on the DeFi stuff, because I did talk to the Wellfield boys a little while ago. So DeFi is a concept, and we actually talked about it a couple months ago on here.
Yep.
It can be applied to traditional finance as well as the whole blockchain crypto world too, as well, right? Because isn't ultimately the concept to eventually eliminate fees and eliminate traditional banking to the point where we're all just walking around with the ability to be our own self.
Citizen banking is like term I like to use for that.
Yeah, independent citizen banking, so to speak.
There's nobody ever agrees on anything, right? When it comes to anything cryptocurrency, you talk to 5 different people, you're going to get 5 different opinions. And those 5 opinions may have some overlap, but no one's going to agree on anything 100%. Now, a lot of folks are going to be like, you'll talk to an occasional person who's like, yes, it's meant to completely alter and eliminate the need for the traditional banking structures, which they view as broken or corrupt. And there's some that's like, no, this is going to augment, it's going to change, it's going to improve on the existing structure. And honestly, from right now where I sit, I've heard a lot of different arguments, and I don't exactly know all the nooks and crannies of DeFi yet. It's a big pool to get into.
Yep.
But from what I've seen, I'm leaning more towards augmentation. Like it's gonna add something which wasn't there before, which is probably accountability. Now, we can't necessarily, I suppose, I mean, right now, the way it sits right now, accountability, but I mean, like, these folks are always going to find a way around stuff like that. I mean, if there's something to exploit, people are going to find a way to exploit it.
Right.
Now, moving on, of course, Tokens.com uses, basically lets you stake all the assets you buy. So they have an inventory of crypto assets which can be used to earn additional assets through a process called staking, which is a type of cryptocurrency mining in which you add assets to a pool and the algorithm rewards the person who has the most assets. That is the explain it to me like I'm 5 version of crypto staking, and it's only honestly it approximates what the essentials what staking is, but staking's been taken so far beyond that to explain it is probably a PhD thesis. And honestly,
Joseph, is it similar to bonds? Would you say, in a sense, like when you stake a coin, do you get some sort of percentage back in returns, or is that not for all coins or projects?
Exactly. You got well, it depends on the coin, but you get a percentage back. You
do get a percentage back, yeah.
Yeah, I mean, sometimes you can get whole coins based on how much you put in.
Right.
Yeah. But anyway, in addition, Tokens is a majority owner of the Metaverse Group, which is one of the world's first virtual real estate companies, which is an entirely new bag of just
virtual real estate.
Like, virtual bullshit.
Virtual real estate. Okay. A crash course in the metaverse. The metaverse is made up of NFTs. Everything you see in the metaverse is an NFT. All of these things are non-fungible tokens. You can buy them. You can buy trees. You can buy plots of land.
Plots of land.
Some of these go for hundreds of thousands of dollars. Hundreds of thousands of dollars.
Oh,
you can buy trees. You can buy NPCs, like video game characters who walk around and will interact with you.
But I can't live there. I can't actually live there. So it's almost like it's like the Second Life thing. It's like you're living.
Exactly. That's what it is. It's interactive, really expensive Second Life. You put on your goggles, you get your haptic gloves out, and you can wander around in an 8-bit pixel.
Wow.
Galen's response is exactly how I felt the first time it appeared. First time I encountered it was something called a sandbox,
right?
And it's it's a gigantic, essentially a sandbox in the beginning. And you buy all of these things. You buy your house, you buy your grass, you buy your weed, you buy your this, buy your that, buy your people. You can attach your real estate. Like there's a guy who spent $450,000 to live next to Snoop Dogg.
Snoop Dogg, yeah.
Seriously,
you want to live next to Snoop Dogg.
In a virtual world where you're not really living next to anybody.
Yes, exactly.
What is Big Ass Digital doing?
Big Digital Assets is the company which is watching all of this happening and laughing at them.
Well, good. We're with them.
Actually, they're not laughing at them all. They're actually a very serious company. What they have is something called Glue, which is a block explorer. A block explorer is a piece of software which they use to look at all the transactions as they happen on the blockchain. Now, okay, some explanation might be required. If you were to look at the blockchain without knowing what to look at, you see a whole bunch of numbers and letters. A whole bunch of numbers. These are hashes, basically. They are private keys or public keys. Sorry, they're public keys, not private. And they correspond to people and organizations and wallets and exchanges and anything else that does business on the blockchain. Now, another corresponding bit of numbers is a coin, and it will bounce between these places based on transactions. And if you can tie this Bitcoin to that organization, you can know everything about that organization just by watching its flows. That's what Big Digital Assets sells, and they sell it to the United States government. They sell it to the Canadian government. They have found hackers. They have traced hacks. They have been around for a while, and they're probably one of my favorite companies in this space because they produce the biggest conundrum for me because I love my privacy, right?
Yeah.
Well, they basically eliminate whatever Bitcoin is being sold on.
Well, Bitcoin was never supposed to be anything but transparent. I mean, the whole
But with privacy,
thing,
yeah.
No, privacy was never a Bitcoin thing. Satoshi Nakamoto did not say Bitcoin was supposed to be private. Transparency was there, so two people could look in and make sure that the deal was being done and being done right.
Well, totally, but they didn't know who was doing it, and they didn't know how much was being spent.
Well, and you could get the idea that this Bitcoin left here, came over to here. This is me. This has to be him because I now have Bitcoin in my account.
Yeah, but the idea is that your identity is hashed. Like, there is privacy supposedly built into it. That was the other thing that was supposed to happen. It wasn't supposed to. Yeah, it was. They wouldn't have hashed the fucking identities if that wasn't the case.
The thing is, the only reason why there was privacy in the first place is because nobody knew how to read it. Now everyone does. Now we have a whole new problem. That is one of the things that is one of the principal problems with DeFi, is that we can watch every transaction going on. We can see who's doing business with who. I mean, when we have Elizabeth Warren and she comes on and she's all like, nobody knows who's doing business. They could be doing with America's boogeyman, the terrorists. Think of the children. Everyone else who pays attention to this stuff goes, no, we pretty much have an idea who we're doing business with. And if we don't, then there are people we can call to find out.
All right, so Big Ass Digital, we like them, BIGG, big, and they're the biggest company, and you're big into them, so that makes sense. We've got we got to keep rolling here, so let's go to Galen, who's going to tell us why.
Excuse me while I crap all over this.
Take a
by
breath.
the way, I like the Clue product, by the way, Mr.
Yes.
Plum in the kitchen. Mr. Plum in the kitchen with the rope.
Yep, there you go.
Yeah, I mean,
What
Clue
do you
as
got,
well.
Galen?
If we're expecting government regulations,
Give us
I
2
guess
minutes.
they would be the one to look at, wouldn't?
Yeah.
Yep.
Well,
Give
the
us 2
problem.
minutes of love.
Yeah. Well, there we go. The love. There's none here. Bitcoin is the newest CDO, and people like Token, who's building a token. Is it Tokens that are building it? No, Token is doing the whole metaverse thing. Yeah, buy another fucking fantasy. Let's buy more NFTs. This is just absolute fucking speculative bullshit based on a hyped up sector that has yet to find a problem that is actually addressing. It is a solution in search of a problem. Switching currency will not heal what's going on right now. Governments will still be able to produce more coinage. They'll just make another fucking token. So basically, it doesn't address any of that. All it does is it changes masters. And basically, right now, we are in the midst of an unregulated mess where exchanges can just close their doors. They have no regulations to make sure that they can actually cover their assets. And they just cover their asses instead. So people that are investing with this, well, it's true mostly. Basically, we have a huge push that we need to make this thing a regulated space. And once we do that, we'll begin to see everything fall off. The idea of creating a second layer token on top of another token, that's like the people who bet on the CDOs. They lost even more money. So the problem is that we've created a digital derivative, and we're increasing that, but and it's ridiculous. This is more navel gazing, financially speaking, than I can even stomach. Decentralized finance, yes, interesting concept, peer-to-peer lending, absolutely, but it's never going to be that way. It's always going to be the big kids lending to the little kids, and the little kids will never get the fucking money because the big kids will only lend to whatever they want to lend to. So it's just another form of a bank. I don't understand what the whole thrill of this thing is. Because it works on a computer? Sure, great, whatever. You know, it's just like fucking Amazon creating Sears and Roebuck on your fucking desktop. You know, we're seeing more of the same. I think we have to stop being dazzled by technical bullshit, which is basically where we're leading to with this whole sector. Bitcoin is beginning to show cracks because people are beginning to realize, hopefully, that this thing is not healing anything. It's a bubble that's waiting to burst. Wellfield, interesting concept as far as the DeFi is concerned. But, it's not exciting. It's It doesn't really do anything. You know, the best thing we could have is better oversight over the banks. You know, let's heal the problem instead of actually just switching jockeys. I don't understand what the big thrill is. Sorry, I don't even know how to comment. Buying shit on the metaverse is absolute fucking lunacy. And if you want to go down that route, you deserve to be sheared like you're intended to be. There we go.
I've got other problems with
say you
metaverse.
did-
I'll get them later.
Vishal, you've got 4 minutes because we've got the guru waiting to do our next round.
Okay, yeah, let's just do this. I'll go over some of the charts here that look really interesting here. I think we should start off with Bitcoin, though, as Galen alluded to, and I think Joseph mentioned earlier. Quite a fall here in Bitcoin itself, and I bring this up just because it's similar to, you know, if you're looking at the gold juniors and the miners, if gold's going down, most of the juniors and the miners will do the same thing. So when we look at some of these charts here of the companies that Joseph talked about here, you're going to be seeing a predominantly downtrend in most of them. Bitcoin itself,
I thought this blew up the other day. I thought it blew up the other day. Didn't it like blow up like in a bad way, like dropped a bazillion?
We had some green. There was some green. People were thinking there was a bottom, but as it turns out, we did sell off today on Bitcoin. And you know, I've said this in like
my
previous
theory is
shows.
that whales stepped in because they're shitting their pants.
It could be whales. I consider Bitcoin and crypto more of a risk on asset, and I think ever since, like Galen said, the whales or guys on Wall Street, big institutions, if they are trading Bitcoin, it's a crypto asset. So I like that word that Joseph uses a lot of the digital asset. You know, look at cryptos as an asset space. And I think, you know, unfortunately for some of the Bitcoin bulls and crypto bulls, crypto is now a risk on asset. And that's why I'm actually quite interested in the DeFi space, because I've been seeing a lot of guys that were hardcore into Bitcoin and stuff saying that, hey, now big government's getting involved or will be getting involved. The big banks are getting involved. Institutions are getting involved. This is not what we wanted. So we got to go to DeFi. So they're looking at DeFi as this space that is away from all these big institutions and such. So I'm not saying it's going to be successful, but I think it's interesting to watch, and I'm excited personally. So just to see where it goes. But Bitcoin itself, it's still weak here, and I think as long as the stock markets fall, cryptos will follow, or Bitcoin will follow. So keep that in mind when we take a look at a couple of these stocks here. So let's start off with Wellfield. Very, very choppy price action. I know we talked about this big pop back in December, and we held between $2 and 15 cents here down to $1.80, and then the big tumble, the big drop, and we had a gap up, and we also had a gap down here, and now we're basically, we did yesterday test previous record lows. Actually, we did print new all-time record lows here on the 25th of January at around $1.10. So I guess the positive way to look at this is it's close to that $1 zone, which is a very major, important support level. But again, what I would be looking for is waiting for some sort of sign of basing. I just think maybe stock markets and Bitcoin have a bit further to fall. And if that's the case, a lot of these stocks that, basically move, depending on how Bitcoin move, will feel a bit of the pain unless they put out some miraculous news anytime soon. Let's take a look here at coin or tokens. Once again, very similar. We had a nice actually breakout back last year in October. And as you guys know, I always say this, I love my breakouts, but I love, especially when we pull back to retest the breakout zone. I would love to see that, usually in the first few weeks. It's even better if it's in the first few days. But in the case here of Tokens.com, I guess the momentum and the hype was really big. We did not pull back to retest that $1.20 zone. But it looks like we might be doing so in the next few days. So I would keep my eye out on that retest there for coin. And, big digital assets. We were talking about this, I believe, on our Discord channel, and perhaps maybe it was a Vishal and Co show, but, we like that breakout. Not the coordinates, but we like that breakout above $1.50. It looked really good. There was some momentum. Okay, but on that retest, there we go. So that's what we usually like to see on that retest, where we see the buyers step in with a nice big green candle. But unfortunately, boom, we sold off. We did not climb above previous highs, which is generally the confirmation of that retest that you want to see. But I don't want to get too, I guess, technical for that. And now, we're back below support. We actually closed back below $1, and now we're battling against this major support level. And if this breaks and we continue to sell off, folks, then I'm thinking 50 cents on big digital right now. So keep an eye out on that. It is an important zone here. So I'm not saying it's going to hit 50 cents exactly. I would want to see what kind of price action we develop here. And obviously, if we can get back above $1, which is the key zone, I think we can maybe make some sort of sustained move to the upside, or at least back to the $1.50 zone. And then let's finally take a look here at DeFi Technologies. And once again, a stock that's hit highs of nearly $4.40 back in November, and just been in a downtrend ever since then. And I think I can probably draw a channel here, because I'm seeing these bottoms here connect quite nicely. And we hit a $1.40, which I would consider is a support zone here. But I don't really have anything to say on this stock here, honestly, on DeFi. I think you just need to see a breakout of this channel to gain some sort of momentum. But a lot of the stocks are showing, similarities to Bitcoin in terms of that big downtrend after a nice move higher. So I would be watching the Bitcoin chart and the stock market chart, because, as I said, they both are risk-on assets, and I would use those to determine when to get into some of these DeFi companies. And I guess Big Digital is not technically DeFi, but a crypto company there.
All right, Joseph, you got $7,500 right now. You gonna spend any money today or tomorrow on any of these firms?
All right. Well, I'm to be honest, of the DeFi peripheral companies, I think they're all pretty much a little too new to be tossing big money at them. Yeah. But for my money, it's big digital assets. Okay. I mean, this sector is going to need regulation, and it's going to need regulators. And if the sector can get a company that does self-regulation, like this one, then that is probably where, honestly, the big money is for the crypto space going forward. I mean, Bitcoin might take a crap tomorrow, but Big Digital has a number of different coins which they pay attention to. Not to mention, they have the first regulated exchange. There's a word they use. It's not quite regulated, but it means regulated. First regulated exchange in Canada. It's a good place to store your money. The entire company is run by ex-police, ex-law enforcement. I've actually had conversations with quite a few folks from this company, and honestly, they have never shown me anything that is not worth liking. So for the most part, I'm probably going to go with $4,000. I'm going to throw $4,000 in.
$4,000 into big.
The most I've thrown into a company.
How about that?
You saved my 3.5 for lollipops.
Rainy day.
Pepsi.
Galen?
Can I take money back? Not a damn dime.
Michelle?
Yeah, so I wanted to bring up, Square, but I guess, just for the sake of time, we won't do it. But I like Big Digital here, just like Joseph said here, because I do think regulations is the next step, and it is coming. I would be dropping about $2,000 here in Big Digital. I'm still a fan of the cryptos in general as like anti-fiat holding, in my opinion. If you're going to bet against the debt and bet against central banks, I love my gold and silver, but I also like my cryptos as well, and I do hold tokens. And I think, I'm not saying throw everything into cryptos, but I think you should have at least some.
Just in case gold has never lost 50% of its value.
Well, I mean, yeah, exactly. That's the thing. I mean, I'm not necessarily saying it's the safe haven, but my take is if we do go to a digital currency system in the future, perhaps Bitcoin becomes the new gold in that system. And I know there's, gold has much more history, which is why I hold gold and silver, but I'm just thinking in the new world, this is, I guess, topics for other times. But I would hold some, Bitcoin as well. And the rest of my $5,000, actually, I would be buying Mr. Jack Dorsey's block. especially at around $100, just because I really like this drop. I think it's actually at a fair price, and a lot of funds are actually looking at it at $100. They've been waiting for this dip here, and I actually think that they might have something going on with the whole crypto payment system. And obviously, they changed their name now, so it's not Square, but it's Block.Inc. And I think that's a bit telling about the direction they're going to be going. So a lot of funds, big money, are looking at this, and it's actually at a price where a lot of them are actually looking at fair value. So I think I would put my 5K in Square. I know it's a bit different, but that's just what I would do.
All right, there you have it, ladies and germs. For Joseph over there, and for Galen down there,
Hey,
time for a whiskey.
yeah, goddamn rights. Get off my lawn!
And for Michelle upstairs, we just want to let you folks know to do your own homework, do your own research, do a lot of reading. We cannot guarantee anything that's gone on here is going to come true, because there are no guarantees in life or in investing.
None.
And past performance does not guarantee future results either. And we'll see you on the very next Equity Guru Investor Roundtable.
Or the two infinite things are, what is it, greed and stupidity?